Slide number 9, policy, servicing premiums and timelines in our daily lives across India. We are very familiar with the importance of dates and schedules. Whether it is the date for a child's school fees or the monthly recharge for our mobile phones or the time we set aside for a festival prayer, we know that being on time matters. In the world of insurance, time is not just a number on a calendar, it is a legal boundary that determines whether a family is protected or if they are standing alone against a disaster. This session is designed to help you understand these critical timelines so that you can guide your clients with the precision of a clock. Managing a policy is not a one time event that happens when the papers are signed. It is a continuous journey of service that ensures the promise of protection never expires. The journey begins with the concept of inception. This is the exact moment when the insurance protection starts. As we learned in our previous discussions, the law is very clear about this through Section 64 VB of the Insurance Act. It states that the company cannot assume any risk unless the premium has been received in advance. Think of it like a train ticket. You cannot board the train and travel to your destination while promising to pay the fare later. You must buy the ticket first, and only then does the railway take the responsibility of carrying you safely. In insurance, protection only breathes life once the money is in the company hand. Once the policy is born, the customer enters a special period called free look period. This is a very beautiful part of Indian insurance regulations because it empowers the consumer. Sometimes in the excitement of buying a policy, a person might not fully understand every small detail. The law gives them a window of 15 days from the date they receive the policy document to review everything. If they find that the terms and conditions are not what they expected, or if they feel the policy does not suit their needs, they have the legal right to return it. If the policy was purchased through electronic means or distance marketing, this window is extended to 30 days to give the customer even more time to be sure. If they return the policy during this time, the company will refund the premium after deducting a small amount for the risk covered and any medical expenses. This period builds huge trust because it shows the customer that the company is not trying to trap them into a contract they do not want. However, once the initial period is over, the customer must maintain the policy by paying regular premiums. This is where the concept of renewal logic comes into play. For life insurance policies, this is about continuing the payments to keep the long-term protection in force. For general insurance, it is usually an annual contract that requires a renewal notice and a fresh payment every year to ensure there is no gap in coverage. We must always remind our clients that a gap of even one single day can be dangerous. We all know that life can be unpredictable, and sometimes a family might face a temporary financial problem, or they might simply forget a date because of busy schedule. To help with this, the system provides a grace period. This is an extra window of time after the premium due date, during which the insurance coverage continues as if the payment had been made. If the customer pays their premium every month, the grace period is usually 15 days. For those who pay quarterly or half yearly or annually, the grace period is extended to 30 days. This is a vital safety net. If a tragedy happens during these 15 or 30 days, the insurance company will still pay the full claim, although they will deduct the unpaid premium from the final amount. It is like a friend who keeps a seat for you even if you are running a few minutes late. As a professional agent, your duty is to make sure your clients never have to rely on the final hours of this grace period. But what happens if the grace period also ends and the payment is still not made? This leads to a very serious situation called a lapse. When a policy lapses, the coverage stops immediately. The promise of protection is broken, and the company is no longer responsible for any loss that happens after that moment. For a family, this is a terrible position to be in. Imagine a person who has paid premiums for 10 years but misses the grace period by one day and then suffers a heart attack. If the policy has lapsed, the company will not pay for the medical bills. The decade of discipline and saving is lost in a single moment of delay. This is why we say that a lapsed policy is like a broken shield in the middle of a battle. Fortunately, there is a way to fix this through a process called revival. Revival is the act of bringing a lapsed policy back to life. It is like a medical procedure for a contract. Depending on how long the policy has been dead, the company might require the customer to undergo new medical examinations to prove they are still healthy. The customer will also have to pay all the unpaid premiums along with a penalty in the form of interest. While revival is a great second chance, it is always more expensive and more difficult than paying on time. It is far better to prevent a lapse than to seek a revival. You must explain to your clients that their insurance premium is not an expense but a priority that must come before any other luxury. To wrap up this part of our study, you must remember that policy servicing is the foundation of a long term relationship. By keeping a close eye on the inception dates and the free look periods, and especially the grace periods, you protect the client family and your own reputation. You are the guardian of these timelines. You must use your communication skills to send reminders and provide guidance so that no policy in your care ever reaches the stage of lapse. When you manage these dates effectively, you are not just doing paperwork. You are ensuring that the bridge of trust between the company and the customer remains strong and unbroken for many years to reach. Since we have understood the strict rules of timing and how to keep a policy active, let us move ahead to see what happens when a customer actually needs to use the policy. We will now look at the moment of truth, which is the claims processing stage.